Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Wow. In the video yesterday, I told you that if the yellow dashed line, a major historical level, holds, we would likely see a breakout through 88.6K and 90.1K to continue the uptrend. And that is exactly what happened. Once that dashed yellow line was decisively broken, price action surged straight to our first upper target of 88.6K. It struggled at that level for around 12 hours, consolidating and absorbing sell pressure. But then it broke. The fascinating part is that just 1 hour after the breakout, price climbed directly to the next level, 90.1K. This time, there was no drawn-out battle. Price broke through and started closing candles above it, slowly pushing higher. As we approach the next upside target, 92.1K, which I didn't even mention in yesterday's video, I began looking for possible exit points on my Binance trade. That was the same position I scaled into from the end of March up to the 7th of April, with an average entry of 85.2K. My original exit was set at 92.4K. However, the market had other plans. It blasted past that level, reaching as high as 93.8K before dipping slightly to 92.6K. From there, it entered the critical zone between 93.3K and 93.7K, likely resolving the local peak it had just created. Based on that price action, I adjusted to a more aggressive exit at 93.2K. I noticed signs of exhaustion on the lower time frames and did not want to overstay my welcome. The exit triggered after we lost 93.3K, locking in a spot gain of 9.38%. That was a textbook trade. Initially, I considered letting it ride to the entry of my other positions around 94K, but the topping signals were too clear. I decided to secure the profit and keep the dry powder ready for another opportunity. Something is cooking, and another long could be just around the corner. The bull is back, and with force. Bears, you better watch out. Now let's look at the 3-day liquidation heat map. Upside short liquidations have been wiped clean, with heat clusters now forming only in the long zones. We are seeing notable long open interest between 90.2K and 89.1K, as well as from 88.1K down to 83.5K. The hottest levels are clearly at 85.8K and 84K. Could we see another retest? Absolutely, but any potential retest is more likely to occur in the upper part of that range. A dip to around 89.5K would be reasonable before we attack the next targets at 95K, 96K, 97.4K, and eventually that psychological milestone at 100K. Switching to the 1-week liquidation heat map, we can see that 83.8K is still glowing. However, based on current momentum and structure, the odds of us revisiting that level anytime soon are slim. That pushes us to check the 3-month liquidation heat map for more insight. And here the picture is clear. Above us, the only substantial short liquidation zone lies between 99.5K and 103.6K. This is our long-term target range for the weeks and months to come. Whether we get a summer slump or a summer surge like in 2020 will depend on the narrative. But if retail steps in like they did back then, we could be in for an explosive move. Another huge confirmation came from the ETF inflows on April 22nd, which totaled a massive $719.2 million. All major players were back at the table, buying heavily for the first time in weeks. Fidelity led the charge with $253.8 million in net inflows, while ARK Invest followed closely with $267.1 million. This kind of synchronized accumulation by institutions is a clear sign that the smart money is positioning for continuation, not consolidation. I'll continue updating you daily. Join the free Discord for real-time trade ideas, entries, and exits. If you found value in this video, click the like button. Subscribe and turn on the notification bell to stay ahead of the market. And see you in the next one.